Ever wonder what really separates the consistently successful people from those who, well, seem to struggle, even when they look like they have all the knowledge?
Yeah, it's a big question, especially in really high stakes, fast places like trading.
Exactly.
Yeah.
And that's what we're diving into today, this idea that sounds simple, but uh, really isn't in practice,
Mm.
taking responsibility.
Mm.
We're looking at the book, Taking Responsibility, the trader's mindset for success.
Right, and our kind of mission here is to unpack that because what the book really hammers home is that success, especially in trading, but it applies way beyond that.
Mm-hmm.
It isn't mostly about market know-how or your specific technique. It's about a very particular mindset, an attitude.
And the really counterintuitive bit, the part that jumps out, is that the successful trader you want to be,
Hmm.
they don't like exist out there somewhere.
No, you actually have to create that new version of yourself. It's an act of creation.
So you forge them, you don't find them. And the tools, yeah, they're probably not what you'd guess. This whole taking responsibility thing, I mean, we've all heard it, right? Sounds like basic stuff.
Yeah, common sense, almost.
But the book makes it clear, really getting it and doing it, especially when you're, in the thick of trading.
Hmm.
It's tough.
Oh, absolutely. The authors actually say that understanding your responsibility here is, and I'm quoting, inextricably connected to learning the principles of success itself.
Okay.
So this deep dive, we're hoping, will shine a light on how you are responsible and maybe just as importantly, how you're not responsible for your trading outcomes. It's subtle.
Yeah, it kind of flips the script on just, piling up more market data or learning another indicator.
Exactly. That often misses the core issue entirely.
So if it's not about grabbing more external info,
Yeah.
what is the medium, as you said, for creating this successful self?
It's your own internal world, your mental environment. That's the term the book uses. It's basically the landscape inside your head, shaped by your beliefs, your attitudes. And it's fueled by, well, your willingness to learn, your desire, your passion for succeeding. It really is an inside game first.
So that internal environment is what lets the successful traders think differently.
Precisely. It helps them build this mental structure so they can trade without fear, but also, and this is key, without being reckless. They've managed to almost eliminate those two things that wreck most people's results.
Fear and recklessness.
Hmm.
Yeah, it feels like a trap. It's so easy to fall into thinking, oh, if I just knew more about the market, I wouldn't make these mistakes. Why are we so wired to think that way? Does the book get into that?
It does. It's a fundamental psychological thing. The source is really clear, the consistency you're looking for. It's not out there in the market.
Right.
It's something you build in your mind. Your feelings and beliefs about being wrong, about losing money, even about feeling great when you're winning, that tendency to get reckless, those are the real reasons for most losses, not your charts.
Yeah, that's a tough pill to swallow if you've spent years learning technical analysis.
Definitely.
There's this fascinating thought experiment in the book, isn't there, about choosing a money manager.
Oh, yeah.
Would you pick the brilliant analyst who's still, scared of losses or gets euphoric, or someone with a maybe even mediocre technique, but who's got their head straight, psychologically sound?
And the answer, as the book says, is kind of obvious when you frame it like that.
Right.
The trader with the right attitude, even if their method is simpler, they'll get much better results in the long run. It just powerfully shows that the winning attitude often beats winning analysis on its own.
And it's funny because a lot of traders almost start out, well, not with the right mindset, but without fear,
Right.
especially if the first trade's a winner.
Exactly. That can create this kind of carefree feeling like the zone athletes talk about, acting without thinking too much.
But is that a real winning attitude or just temporary luck?
It's temporary. It's basically a side effect of not having felt the pain of loss yet. A few wins can make you feel invincible, but if that feeling isn't built on solid beliefs about risk and loss, it's just setting you up.
So what is a real positive winning attitude, according to the book?
It's defined as expecting a positive result from your efforts, with an acceptance that whatever results you get are a perfect reflection of your level of development and what you need to learn to do better.
Okay, that acceptance part is key.
Huge. It's what lets great athletes say, shake off a mistake and keep playing instead of beating themselves up.
So that initial carefree state, born from just not knowing better, really,
Yeah.
it sets them up for a fall. When that first inevitable loss hits, what happens then?
Well, they process that loss through the lens of whatever beliefs they already have.
Yeah.
And for most people, that involves blaming the market. It feels like the market did something to them, took away their good feeling, caused them pain. The book links this way back, actually, to childhood stuff. Feeling powerless when a toy was taken away or you were told no. We learn, often without realizing it, to blame the outside world.
That's a really critical point, because the market, unlike, say, your parents or society, it has zero obligation to give you anything. It's a zero-sum environment, basically. Someone wins, someone loses or misses out.
Precisely.
So if you find yourself blaming the market, feeling like it betrayed you, that's a huge red flag that you haven't really accepted that reality.
Exactly. And taking responsibility really deeply means accepting that you, not the market, you are the one responsible for your success or failure. Full stop.
And if you don't embrace that, the book warns about, what was it, 2 big psychological hurdles.
Yeah, 2 major obstacles pop up almost automatically. First, you start seeing the market as an adversary, an enemy, so you naturally close yourself off from opportunities because you're fighting it.
Right.
And second, you fool yourself into thinking that just learning more about the market, more analysis, will fix your trading problems, your emotional problems.
Yeah, which leads straight into that, what did it call it, the revenge cycle?
The revenge cycle, yeah.
Yeah.
Where you learn more, not just to win, but almost to get back at the market, to conquer it so it can't hurt you again.
Sounds exhausting.
It is. And that's why sometimes, paradoxically, learning more can actually make things worse.
How so?
Because the market is just neutral. It's just information. It doesn't know you, doesn't care what you want. The meaning you attach to a price moving up or down, that's purely in your head.
Okay.
So if you start to see market information itself as painful because maybe it led to a loss before, you'll subconsciously start to block it out, avoid it.
Cutting yourself off from potentially good trades.
Exactly. You'll feel like the market is working against you, but really you're just battling the negative feelings that come from not accepting it owes you nothing.
So, if we follow that logic, trying to avoid all pain by avoiding all losses, it's impossible, right? The market has patterns, sure, but they aren't perfect.
Yeah.
Losing and being wrong are just baked into the process.
That's a fundamental takeaway. The book uses that classic example, someone stuck in a losing trade. They only see the tiny little ticks that go in their favor, completely ignoring the bigger trend moving against them. And then later they kick themselves, why didn't I just cut the loss? Why didn't I reverse? Well, the opportunity to do that was there, but their mind had labeled that action as painful and essentially hid it from their awareness.
Wow.
That shift from the early carefree state to this mode of trying to prevent and avoid pain, that's a fundamental switch from a positive attitude to a negative one, even if you're learning a ton about markets in the meantime.
And this negative focus just creates a vicious cycle, doesn't it? The more you learn, the more you expect, which makes it even more painful when the market doesn't do what you think it should.
Exactly. It debilitates you, which pushes you to learn even more, thinking that will solve it, and round it goes.
Until hopefully, you either quit trading or have that light bulb moment and realize your perspective is the problem.
Right. And it's these different paths that lead the book to sort traders into basically 3 buckets.
Okay, what are they?
Well, first you have the consistent winners. Tiny group, maybe less than 10%. Their equity curves just climb steadily. And the key thing is they seem immune to the psychological stuff that causes the big swings for others. They've really internalized these responsibility principles.
Okay, tiny group then.
Then you have the consistent losers, maybe 30-40%. Their equity curves are the opposite, a steady downward slope, often stuck with fixed ideas, unwilling or unable to adapt, just repeating the same mistakes.
And the biggest group?
The biggest group, yeah, maybe 40-50% are the boom and busters.
The roller coaster traders.
Exactly. These folks are fascinating because they have figured out how to make money, sometimes a lot of money. Their problem isn't making it.
It's keeping it.
Precisely. Their equity charts look, well, roller coasters. Huge climbs followed by terrifying drops. Those amazing winning streaks they have, they always end in disaster, usually because of either euphoria or self-sabotage.
Euphoria sounds good, but dangerous in trading.
Supremely dangerous. It's that feeling of absolute certainty, nothing can go wrong. So what happens? Rules go out the window, position sizes get way too big. And then even a normal small price move against you can cause this mind freeze, total panic, and wipe out huge chunks of profit. Then you feel betrayed. You blame the market.
And you go learn more to protect yourself, starting the cycle again.
You got it. And then there's the flip side, self-sabotage, which can be sneakier.
Like making dumb mistakes.
Yeah, obvious errors. Entering a sell order when you meant buy, getting distracted right at a critical moment. The book suggests this stuff often comes from deeper conflicts, like maybe feeling you don't actually deserve to win consistently.
Wow. There's that quote from the futures broker in the source material. Something pretty blunt.
Oh yeah, all commodity traders are terminal. Stark, right.
Yeah.
But his point was, without fixing this mindset stuff, without learning this responsibility piece, the journey almost inevitably ends badly.
So you have to learn how to handle the winning streaks, the confidence, just as much as the losses.
Yeah.
Balance confidence with restraint.
Absolutely. Recognize your own potential for messing things up, basically. Because the core insight, maybe the biggest one, is that the market doesn't create your attitude. It doesn't make you feel confident or scared.
It just reflects what's already inside you.
Like a mirror.
Exactly. It's a mirror. If you feel confident, it's probably because your internal beliefs are lined up, you're taking responsibility, you're open to learning. If you feel angry or afraid, it's likely because you're still thinking the market causes your results.
And not taking responsibility keeps you stuck. Because if it's not your fault, then there's nothing you need to change or learn, right? So you don't grow.
Precisely.
Yeah.
Which leads to maybe one of the most painful experiences traders talk about. Oddly, sometimes more painful than just taking a loss. Leaving money on the table.
Ah, yeah. Why is that often worse?
Because when you lose money, you can usually find some way to rationalize it, maybe blame the market, bad luck, whatever. But when you leave money on the table, the market did exactly what you hoped it would do. You just couldn't pull the trigger. You weren't able to act.
Oof. There's no one else to blame there.
Nope. It's all on you. And that drives home the point. You're not responsible for what the market does, but you are 100% responsible for everything else that comes from your trading.
Everything you've learned.
And everything you haven't learned yet that's still waiting there for you to figure out.
So the conclusion from the source is pretty clear then. The quickest path to success isn't more analysis.
Nope. It's developing that winning attitude. No amount of charting skill will make up for a lack of it. If you really want to shift from being fearful to being confident, if you want that steady upward equity curve, the very first step is taking total responsibility. Start expecting the market to do things for you.
Okay, so let's try and recap the big picture here. Our deep dive really showed that consistency, getting rid of that fear and recklessness in trading. It comes from building a specific mindset, that winning attitude.
Yeah, not just from looking at charts harder. The consistency you want is in your head, not out there in the market's patterns. Your beliefs about being wrong, losing, handling wins. That's the root cause of most losses, much more than technique.
And that market as a mirror analogy is so powerful. It's not making you feel things. It's reflecting your internal state.
Right. Confidence comes from aligned beliefs, taking ownership, learning. Fear, anger. That comes from thinking the market dictates your reality. It's a total shift in perspective.
And we saw that play out with the trader categories, especially the biggest group, the boom and busters. They prove you can know how to make money.
But still fail spectacularly because of euphoria or self-sabotage. Mindset issues, plain and simple. And that pain of leaving money on the table really highlights it too. It hurts because there's no external scapegoat. It's just you and your own capacity to act or not act.
So, thinking beyond trading for a moment.
Yeah.
If taking this kind of complete responsibility is so fundamental for success in something as wild and unpredictable as the markets, what does that imply for other parts of your life?
Yeah, that's the question to chew on, isn't it? Where else might you be, maybe unconsciously, projecting your hopes onto external things or blaming outside forces for your results?
When the real power to change things, to grow, actually lies in your own attitude, your own perspective.
Exactly. What winning attitude might you need to work on right now in some other area? And what could you possibly gain if you fully, truly embraced responsibility for your outcomes there?
It's a powerful thought. Remember, the market, or really any challenge you face, it can't be your opponent anymore if you decide, truly decide, to do it all yourself. You might just be amazed at how fast you figure out exactly what you need to learn next.
And how fast you learn it.